Maybe it's my chart of the year. Bring up the chart right now. Catherine Mann basically invented this chart, maybe with a good morning to Stephen Roach at Morgan Stanley. The twin deficits. You wrote a book 20 years ago. I remember talking to Larry Kudlow over 20 years ago about, is the trade deficit sustainable? And you've got a chapter in there on the twin deficits. Should we fear our new twin deficits?
Yes, we should. Your chart there with the red dot for 80-84, that was the first article that I wrote about the twin deficits, actually. And then I continued on writing about it because, look, it's good every 10 years, and it'll be good again.
What is our codependency now? You formed this China-U.S. codependency. How does that fold into the president's naivete on deficit dynamics?
So we continue to have the codependency. In other words, very important trading relationship, very important for supply chains, very important for U.S. consumers, very important for business. You can't disentangle it just by fiat. You can't just sort of say, cut it in half and everything will be okay. So that's the naivete.
Okay. Catherine, are you worried about the U.S. economy overheating, or are you actually worried about the U.S., something going wrong in the U.S. economy?
So, the first episode of the twin deficits that was particularly dramatic was, of course, Volcker and Reagan. And we know how that happened, and we know how that ended. And I wouldn't like to see a repeat of that because, it's a different time. I don't think the Fed would be as tight, but the fiscal policy is even stronger than it was back then. So it sets up a tension between fiscal and monetary. That is tension not just in the United States, but we could see it coming in other countries as well. And that represents a situation for the global economy and for real investment that is not satisfactory, not going to get us to where we need to be with regard to an improvement in potential output going forward.
The ambiguity of dollar dynamics, deficits, yields higher, dollar stronger, and you're going to tell me no. Explain how you go, Professor Buiter, on weak dollar, strong dollar, given these new deficits.
The brief answer is I can't. I can't make sense of it except by assuming that the safe haven demand for the dollar has vanished, either because the dollar is no longer viewed as a safe haven currency, or because there simply is no safe haven motive in the global economy at the moment. All other fundamentals, interest rate differentials, growth differentials, fiscal policy differentials, all say dollar strong and stronger. So it is very hard to make sense of this, except through some market psychology argument. Yes.
But Willem, what would the market psychology be? Is it that they are worried about trade wars and therefore dollar gets sold off on the back of it?
Well, the dollar weakness started long before I think people were really concerned about trade wars. So clearly, I think in the last few weeks it has contributed to that when the stock market tanked and the dollar weakened in response to bad news about global trade prospects, especially extended conflict with China. But no, I don't think that is the main reason.